Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then, we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment, from a monthly standpoint, we are experiencing a breakout from a quite long-lasting monthly range. In fact, what we can notice is that the market was stuck here in this range for quite a lot of time, more than 1 year. And while the market was in this range, we had the top here acting as resistance and the bottom here acting as support. However, what we're seeing right now is a breakout from this range. In fact, this green candle here just closed above the high of the range. We now had the retest here of this previous high of the range, which is now turned support, because as you know, if we have a level of resistance in the market, which has been acting as resistance for quite some time, and then the market breaks above it, at that point, all that previous resistance is turned support. And the market usually goes and retests the level and then rejects it to the upside, which is exactly what we're currently experiencing here. So from a monthly standpoint, at the moment, everything seems quite bullish, and there is the possibility of seeing more bullish continuation being created away from this level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice how as the market is rejecting the support to the upside, more bullish price action could be created away from this level. And we can see how this previous resistance, which was also the previous supply, is now broken to the upside as well, already retested from a weekly perspective, and the market is rejecting it to the upside. So at this point, from a weekly standpoint, we now also have new structure. What kind of new structure I'm speaking about? I'm speaking about this red candle here, which, since it was the previous level from which the market stopped after this massive impulse and created a correction, and now the market is breaking it to the upside, also this level is turned from previous resistance to now support, which the market could want to go and test and then reject to the upside. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, we can notice how the market has just created this overextended W formation. Now, generally speaking, after the creation of an overextended W, what you would expect is for the market to first provide a correction and then the continuation to the upside. Because when the market creates such a pattern, it is usually overextended to the upside in mid of a correction. We can see, for example, let me see if I find another case of an overextended W formation. Well, for example, this one here, we had here this overextended W formation. After that, the market created a rejection to the downside. Now, in this specific case, we have a market which is breaking all resistance to the upside. So if from here we will see a correction, in my opinion, and this is as usual just my experience, we could see with higher probability a retest of the level and then more bullish continuation, essentially continuing the breakout away from that monthly resistance as we have previously identified. Now, also here on the daily, as we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this gives us three levels, the 0.32, the 50%, and the 0.618. Which are quite strong levels of previous resistance, which now are turned support. So if the market will now go and retest this level, here we have confluence of support. And instead of a confluence of support zone, we have an increased probability of seeing institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the CAD, what we can see here is that with the last reports, net positions have been decreased quite massively. We went from having minus 65.5k net positions all the way down to minus 175k net positions, showing a clear decrease of net positioning and moving to the bearish side of the CAD. And this makes USDCAD stronger because if institutions are shorting the CAD, they're essentially moving to the bullish side of USDCAD by shorting the CAD, therefore making it stronger. So if we will see a correction to this confluence of support, there is a possibility of seeing more institutional shorting of the CAD inside of here, so longing of USDCAD, which could further increase the probabilities of a potential push higher. So if we will see this correction, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.